Hello and welcome to BQ Prime. You're joining us on this special conversation with Mr. Saurabh Tripathi, the senior partner at BCG. Mr. Tripathi, you've just launched a special report for this FIBAC event, this annual FIBAC event that you do. Some of the findings, I went through the report. I have a few questions trying to decipher a little bit more. But why don't you tell us a little bit about the core findings that you want to highlight?
Okay. The core finding of the report, or the core assertion, if I may say, is that India as a country has adopted digital as a national strategy. No other country in the world has done that. What that means is, like, UPI has been a stupendous success. Like, everybody in the world knows about it and credits India for something at such a large scale in such small time. I think with the confidence of having done UPI, I think our government is going ahead with a plan to create digital stacks in almost every industry: agri stack, ONDC for e-commerce, health stack, this, that, and the other. And that is, in next few years, that will get many businesses on digital platforms, right? And when businesses go on digital platforms, they behave very differently. They start thinking about their banking relationship very differently. So our first assertion was that Indian banks are under a lot of pressure. If they don't move fast and transform themselves, they are going to lose customer relationship, and that will destroy a lot of value. And the next big thing that is going to happen is on the SME side, after what has happened on the UPI. As we all know, UPI, a large part of UPI transactions, almost entire UPI transactions are sort of originated on Google Pay, Phone Pay. They're not originated on bank platforms. So that will happen on the SME space, and that will not be good news for banks. Right? So that was point number one. Point number two was that they need to then transform themselves digitally very fast. And then a recognition that transformation of banks digitally is a very, very difficult job. It is not recognized how enormous it is, because we estimate up to 1,000 crore of investment every year is required for several years. Like, it sounds very large, but it is true. Now, we have seen this, that the number of things you need to change and you have to experiment is just too much. And then more importantly, you have to get a lot of new, unique technology talent, which does not always want to work in a bank. But you can't help it. You can't outsource these things to a vendor. So many leading bank leaders are struggling with it, going ahead with it. But we also argue that, like, every bank will not be able to do that. And so regulator needs to think about how to maintain systemic stability, systemic risks, in light of the fact that at least not some, but many banks will struggle with this transformation that is ahead of them, and their performance will suffer. And then we also argue that, government has to do something here. It's not just the banks, because we need to upgrade our national digital infrastructure now so that they can take the next level of cost reduction. For example, Singapore has a system where your KYC can be done with Face ID on the phone. That means, the cost of KYC of a bank can be ₹10 instead of ₹50 that is right now. One example. So many such ideas as to how we can actually create a better ecosystem where banks can actually also keep pace with the change in the ecosystem.
All right. A couple of questions from my end from the report. You point out about a $5 billion investment that banks would need on an annual basis to keep pace with the current pace of technological growth. On the other hand, you've also pointed out that about $8 billion worth of investments came into fintech startups, and a lot of that actually went to people who are competing with banks rather than complementing banks. I'm just curious to understand, fintech would probably be able to use that fund base better because of the nimble sort of attitude that they have, was a bank which already has plenty of structural issues.
Yeah, good observation, actually. That's a very good observation. Yes, that's true. I think fintechs are able to use the investment better because their ways of working are a little bit more in tune with what is required for a tech setup. Banks, do struggle. That's
so my question is 5 billion enough? Do you think that there will be need for more?
I think 5 billion is a lot more than what the industry spends now.
Okay, fair enough.
I believe that if they do a good job of it in terms of spending it well, it is enough. 5 billion is good enough.
Okay. Speaking about this expenditure, a lot of this is being driven by your bigger banks, right? At this point in time, I don't know if the expenditure or the way that expenditure is structured is equal amongst the entire banking system. So how do we take, say, the smaller entities in the space forward? Is the RBI or the government intending, or are they in any place to actually help that system?
No, I don't think their job is to help they have to create national infrastructure. As I mentioned, I talked about eKYC, KYC, like the way Singapore has done. There is more ideas, actually, but they will help everybody, not the small players or big players, right? We need to, for example, embrace blockchain for asset tokenization. what that does is, assets, your house, car, they are tokenized and put on the blockchain. And if you want to take a loan against them, you can take a loan in the blockchain world. You don't have to physically go to the registrar office and do everything. And then even secured lending can become as fast and quick as unsecured lending is today, and the cost can dramatically go down, right? So government has to do those kind of things to create infrastructure which will benefit large and small banks both together. I think small banks, or let me say banks which have a severe talent shortage or balance sheet shortage, I think that was my point to the governor also, that 5 years down the line you will be facing a lot of the banks who
Probably become irrelevant.
yeah, and they will become systemic risk. So we need to do something about it now. Right? We can afford only entities who can survive in this transformation environment, because India is changing very fast. The banking system has to keep pace.
The other point that you mentioned, that the talent out there in the market probably doesn't want to work with a bank. What can be changed on the bank end so that talent gets attracted and wants to do something, use their skill set for the bank?
I think it's incorrect to say that talent doesn't want to work with the bank. I think that talent wants to work in a place where the talent finds that they will get the best environment for their own development, right? And they want to work in a place where their superiors are from the area which they belong to. So, for example, if I'm a data scientist, I want to work with somebody where my boss is also an ace data scientist, that I can learn something from, right? So that the expert talent will not come and report to, what shall I say, a conventional banker, let's put it this way, right? So they want, so that is the challenge, right? I mean, so it's not true that banks can't create it. They can create an environment where they have to obviously first hire the senior team, which is aspirational, which has the charisma to attract people. The same people who want to go to Google will go to a bank, because the bank can argue that we will develop the same type of innovative products and services that other fintechs do or somebody else does. But then they have to go to the talent market and say, look at my work environment, look at the people you will work with, look at my ways of working. It almost feels like a modern age startup environment we have created. Then they will come. It's not impossible, but it's tough.
The last question I want to understand from you is the bank versus fintech question again. Your report points out that there is a large segment of the fintech industry which is getting the funding because they are competing with banks, or vice versa. They are competing with banks and then they're getting the funding. The question here is this a sustainable system? Because we know that there is an thought process that people have to work together or complement each other, and that's the only way to grow forward. Do you think competitors stand a chance in the broader scheme of things?
Look, I mean, our report has highlighted that India is so unique that 80% of the fintech investment goes in those fintech which compete with the banks. Globally, it is 50-50. Half of the funding goes towards those fintechs who are creating products which banks can use to improve themselves. And I think in India is different because Indian banks are not yet ready to be very attractive as a partner. And they can't integrate so easily, etc. So I think fintechs find it easier to say, look, we'll go head on, go to the market ourselves and fight for the share of wallet, rather than trying to find a way to convince a bank to integrate my services into themselves, etc. And they are not ready for it. So that's why it is like that. I think both models will succeed. But our view is that as we are going to the fintech winter, as we are calling it, more funding will go to the banks, to the fintech who are going to want to work together with banks. But then are banks ready? Right? Very few banks in this country can quickly integrate with the fintech. So then it doesn't work.
Thank you so much, Mr. Tripathi, for joining us on this conversation. Thank you for watching.